So everybody's gradually shifting their dollar investments to gold. It's going to take time because they are not going to rush it and drive the price too fast up. But it's happening, and it's happening day by day. And on top of that, now, for the first time, we're seeing major investment banks or investment managers recommending gold at a very high level. And that, of course, a whole investment community will follow. I mean, they're all lemmings, that nobody, you should buy an asset when it's underpriced, undervalued, and unloved, but still has real value.
Egon von Greyerz, a prominent voice in the global precious metals space, has long warned about the shifting economic power from west to east. In his latest remarks, he underscores that the United States is rapidly losing its financial dominance, weighed down by unsustainable debt and a declining dollar. According to von Greyerz, this decline is not a sudden event, but a structural unraveling that has been in motion for years. He highlights that the BRICS nations, particularly China, India, and Russia, are emerging as the future economic superpowers. These countries not only hold vast natural resources, such as Russia's estimated $85 trillion in commodities, but also understand the strategic value of gold. While Western leaders appear increasingly distracted by geopolitical conflicts and economic mismanagement, Eastern nations are strengthening ties and positioning themselves for a post-dollar world where gold will play a central role in trade settlement and monetary stability. Von Greyerz emphasizes that the confiscation of Russian dollar reserves by the West marked a turning point for central banks globally. That event shattered trust in the dollar as a neutral reserve asset, prompting many nations to quietly shift their reserves into gold. He points out that this transformation is gradual but relentless, with central banks now purchasing gold at the fastest pace in modern history. Even major Western investment institutions, once dismissive of gold, are beginning to recommend it, a clear signal that a broader financial realignment is underway. Looking ahead, von Greyerz believes we are witnessing the long, slow death of the Western debt-fueled empire. The financial system built on leverage, derivatives, and endless monetary expansion is being replaced by one rooted in tangible assets, commodities, and real value. He predicts that as Western bond markets deteriorate and the debt spiral becomes unmanageable, countries will be forced to acknowledge gold's role as a stabilizing force. While countries like Poland are increasing their gold reserves significantly, now aiming for 30% of total central bank reserves, most other European nations are trapped under mountains of debt and can no longer afford to buy. In contrast, the East continues to rise steadily, backed by gold and real assets, signaling that the era of financial dominance by the West is coming to a close, and a new monetary order is already taking shape. Now, we present the clips from von Greyer's interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
The US is losing its financial and economic power totally. They're massively indebted. The dollar is declining. It's going to continue to decline. Not in a straight line, nothing does. But with that economy and that amount of debt, the power is shifting, and we've been saying this for many years. It's shifting from west to east. It's shifting to Asia, to southern countries. It's shifting to the BRICS countries, and the powerful nations in the coming, I don't know how long, at least 50, 100 years, will be China, India, a lot of Asian countries, and Russia. Of course, nobody likes Russia today in the West, but remember, Russia has about $85 trillion of natural resources. They are extremely powerful, and no countries can be sanctioned forever or be at war forever. So and what has happened, of course, is also that Europe and the US has driven Russia, China, North Korea, Iran together as a very strong entity. And this is has been happening gradually, but seeing them meeting in China recently and holding hands, this was a real sign to Trump and to the US and to the European leaders who are all very weak and just want to make war to be important, although they have no chance in any war from the point of view of weapons or money, or even armies, but they still want to. They have problems at home, and then that's when you start a war. So the Eastern countries or the BRICS countries, they are going to be so much more powerful than the Western countries, which are all in decline, and therefore this is where the future lies, and they understand the importance of gold. I mean, they all hold a lot of gold. Some of their trading or trade between countries, etc., will be settled in gold in the future. The balances will be settled in gold, and of course, when we talk about now central banks buying gold more than ever. This is, of course, started, as you indicated, this started with the sanctions by the US and Europe of Russia and the confiscation or freezing of the Russian dollar assets. No one's going to put any assets, especially not central banks, reserve assets into dollars anymore because they're at risk. So everybody's gradually shifting their dollar investments to gold. It's going to take time because they are not going to rush it and drive the price too fast up. But it's happening, and it's happening day by day. And on top of that, now for the first time, we're seeing major investment banks or investment managers recommending gold at a very high level. And that, of course, a whole investment community will follow. I mean, they're all lemmings. That nobody. You should buy an asset when it's underpriced, undervalued, and unloved, but still has real value. And this is, of course, what we did in the beginning of the 2000s when we bought gold in a major way at $300. So people will ask now, is it too late? A lot of people have been waiting. There'll be a correction. Everybody's waiting for the 2008 correction. It won't happen. It's not the same today. Today, there is a fundamental shift away from the West to the East, to countries who understand gold and the importance of gold and who hold gold to a much greater extent than the US. US probably doesn't have anywhere near the 8,000 tons, whilst China, Russia, and many of these countries probably will have a lot more gold than they are officially declaring. So this is where the power is going. And as I said, the investment community will follow the money. It has always followed the money. And the money goes, the center of money is now moving to the east. It's not going to happen overnight. Of course, the New York and London, etc., are still powerful, but they've built up an empire on debt. And the future world economy will be based on commodities, real values, and proper trading, not on funny money and on derivatives and massive leverage, etc. So that's they'll be good for the world and bad for the West. The West is in a decline, which will, as I said, all empires when they die. I mean, it takes a long time to die. They started already a long time ago, but it will continue whilst the sun in the east is rising gradually but strongly.
Von Greyerz underscores that the current rise in gold and silver prices is not merely a speculative rally, but a signal of a deeper structural shift in the global monetary system. He notes that gold's strength is not a reflection of its appreciation, but rather the ongoing devaluation of fiat currencies worldwide. Since the end of the gold standard in 1971, the explosion in debt and the proliferation of derivatives have steadily undermined the purchasing power of paper money. According to von Greyerz, Gold has maintained its value throughout centuries of economic upheaval, acting as a consistent store of wealth when currencies fail. The recent acceleration in gold demand, he says, is a direct response to deteriorating confidence in the current financial architecture, a system increasingly reliant on unsustainable borrowing and monetary intervention. This shift is now gaining traction beyond individual investors, with institutional players beginning to take notice. Von Greyerz highlights a recent recommendation by Morgan Stanley's chief investment officer, advising a 20% allocation to gold, a striking development from one of the world's largest and most influential financial institutions. He views this as a clear sign that traditional finance is beginning to acknowledge the risks inherent in fiat-based systems. Simultaneously, central banks, particularly in Eastern and BRICS-aligned nations, are increasing their gold reserves, in some cases, preparing to settle trade imbalances using the metal. With the West grappling with mounting debt and political fragmentation, von Greyerz sees a fundamental power shift underway, one in which physical gold and silver will play a central role in restoring monetary credibility.
We're pleased to try to help you, Egon. We've helped ourselves for a long time, and then we've been helping others. So I know you don't really need help, but nevertheless, the explanation of what's happening now is very clear to me. We went into this. Well, we went into gold and silver 25 years ago, and that was for the pure reason of preserving wealth. Obviously, at the time, gold had gone from $850 in 1980 down to $250 in 99. So we were waiting for this to bottom out. And of course, the best sign was that all the central banks were selling at that time. So that is always a good signal that, they don't know what they're doing, central banks, ever. To do the opposite of what they're doing is one of the things one should always do. So, as I said, we saw the risks in the world, we saw debt increasing, we saw derivatives increasing, and this was already in the 90s. I was watching this and waiting for this to happen. And of course, as a student of history, I also saw that, with the debt exploding since 1971, when Richard Nixon closed the gold window and thus stopped the gold backing of the dollar and all other currencies, that this is from then on, debt grew exponentially. So it was very clear to me that we were at the end of a monetary era. The monetary era. No money has ever survived, as you know, in history. Every currency always go up to zero, but it can take time. And of course, the fact that you see it at a certain time doesn't mean that it will happen then. But the explosion of debt and deficits, and the general change in political atmosphere, and of course in moral values, which they all go together. That was giving us a clear signal that this is the time now to start thinking about preserving your wealth. So we basically watched this market for a few years, and then when gold seemed to have bottomed out in 2002, that $300, this is when we went in and told investors that we advised at the time to buy for up to 50% of their liquid assets or financial assets on gold. That was quite a brave statement. Now, we, of course, did not have normal investment clients. We advised some wealthy families at the time, and they were all interested in wealth preservation rather than maximizing return in the short term. They were long-term thinkers, and so were we. So we put a good chunk of money into gold at that time, and it was never meant to open up for outside investors. But then demand made us open it up for other people. And so because we had created a system of preserving wealth outside the banking system, or with holding gold directly, in the name of the investor in safe private vaults outside the banking system. So, and we were fortunate enough to, as I said, pick up gold at $300, which was the lowest for 25 years, basically, or 23 years. Then, of course, to me, it was very clear that we were going to see the end of this monetary era. That, gold going up is not really what we should look at. What people should look at is instead the value of money going down. And that's, so it's not gold just goes sideways. Gold is permanent or constant purchasing power. So to me, it was quite easy, especially since, I've been through a long life in business and in banking and investment. And I thought, now this was the time for wealth preservation. And of course, it's been a great journey since then. So we have, seen gold since we entered that $300 going up almost 13 times in dollars, for example, and more in other currencies. But again, as I said, it's not really gold going up. It's the value of the money in your pocket, investors' money going down. And people don't realize that. They think that prices are going up. No, prices are not going up. It's of course, the effect of money going down in value is that prices are going up. But it's actually the pound or the kroner or the dollar in your pocket that's going down. And then, since we started, we've had almost 25 years of bear market in the value of currencies. That's the only way people should look at it. They should not look at it as if inflation is actually increasing the prices, but it's the money that is going down. And of course, I thought that 2008 would be the end of this monetary era, but they managed to save it, for another now. So what is it? 17 years right now. But I think now we are getting to the acceleration phase of the decline of the currencies or paper money, fiat money, and that's why all of a sudden the world has actually started to discover gold and silver also as not just a medium of exchange or a derelict asset, but actually as the real value and something that throughout history has kept its value. Is actually, we call it nature's money. It's the only money that has actually maintained its value. And now we are in 2025 at, only still just over 0.5% of world financial assets are in gold, 0.5% only, which is quite amazing. And that's historically very low. That's going to change dramatically now. And now you maybe have seen that, for example, Morgan Stanley, which is one of the biggest asset managers in the world, has recommended, their CIO, Chief Investment Officer, has recommended 20% in gold. That is incredible. No one has ever recommended gold from any bank or institution or asset manager. And now we're talking about up to 20%.
The increasing gold accumulation by Western nations marks a significant shift in global financial strategy, reflecting growing skepticism toward fiat currencies and traditional monetary systems. This trend is likely to tighten the available supply of physical gold, driving prices higher and increasing market volatility as demand outpaces production. Central banks and sovereign wealth funds diversifying their reserves toward gold signal a broader move to reduce dependence on the US dollar, potentially accelerating the gradual erosion of its dominance as the world's primary reserve currency. This rebalancing of reserve assets could prompt other countries to follow suit, reshaping global capital flows and reserve management practices. In addition to market impacts, the shift toward gold accumulation carries profound geopolitical and economic consequences. It suggests a realignment toward a more multipolar financial order, where tangible assets like gold regain prominence in international trade settlements and financial reserves. Governments may adopt new monetary policies centered on preserving wealth and purchasing power amid mounting economic uncertainty and inflationary pressures. This strategic emphasis on gold could also herald a gradual move away from leveraged, fiat-based financial instruments toward more stable, asset-backed systems, ultimately fostering greater financial resilience. Do you think the future of money will return to real assets like gold and silver, or will digital currencies take full control of the financial system? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.